All right, folks, what I want to go over today is the psychology of support and resistance. Now, these are very big psychological levels, and we need to address this so that way we know where to buy and sell at. Otherwise, you're going to be caught in a bad trade. So, this is a big and important piece of information. Now, what I'm going to do is I'm going to draw basically where the stock will be at. So let's just say, let's say the blue line here would be the stock, okay? Normally, in a first run up, we had a little short squeeze that happened, right? Came back down, consolidated, came up, came back down, held here, and we broke out. We started going higher, 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 pull back like that. Came back up, consolidate, 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 consolidate. Came back up, bam. Okay, that was the whole move of AMC, okay? Now, what I want to get into is the support and resistance levels for you to actually gauge where is support and resistance, all right? Now, resistance is basically where the price was suppressed. So if I go here and I decide to change this to red, okay? This will be my resistance line. So I'm going to draw it for you right here. So I'm going to put it right here. I'm going to draw it just like that. Bam. All right. I'm also going to draw resistance line, well, support right here. It's going to be the green, okay? So I can show you what I'm talking about. Okay. Also going to draw it right here too, because there was support here too. All right. And we had resistance right over here. The price was suppressed right here. So I'm going to draw that. All right. And we also had resistance right here. So as you can see on the chart, how do I take this ruler away? All right, let's get back to, I got to mark it up again. Okay, here we go. So as you can see on the chart here, you have, when we first started, you have support and resistance. Price was suppressed the first time and pushed back down because it was a major resistance at this level because the sellers kept pushing it back down. Always think of support as where there's a lot of demand. A lot of people are going to buy at that level. And always think of resistance as where there's going to be a lot of supply because the psychology behind it is supply and demand. In the beginning, when you're first starting out and you see a stock and you research it, you've done your research, there is a lot of supply on that stock because it's cheap. Nobody has it. Nobody wants it right now. There's no demand. So there's a lot of supply everywhere. So you ever heard the term whale? Whale means a person who has a lot of the stock or a lot of the crypto or a lot of the Forex. Well, in the beginning, there's a lot of supply everywhere. So if you go and you buy that stock, that crypto, that Forex, we're going to use AMC, for example, because this is a more in the current scenario. When you buy a lot of AMC, you're capturing a lot of the supply before the demand came in. So a lot of supply and demand happened way back in time over here, okay? But let's undo that. Undo that arrow, okay? Way back in time. So when we had the first gamma squeeze right here in this area right here, we had a whole bunch of basically short shares that were getting pushed up, and folks were getting short squeezed, meaning when the stock goes up, short sellers lose money and they start to buy to cover. And when they buy to cover, it creates buying pressure to the upside, okay? You don't want buying pressure to the upside as a short seller, so you would buy the cover to get out of your position. So that created big momentum to the upside. But eventually, after they covered, a lot of people started to sell because as a whale, if you bought it at $3 and $5 or $10, okay, and now all of a sudden each stock is worth $20, you know, and you bought it at, oh, let's just say $3, you're going to want to sell it. You know, as somebody who's brand new, who just came in, doesn't know anything about stocks and short squeeze, you're going to want to sell it because it's worth a lot of money. But the thing is that you're a whale, okay? You have tons of supply. So if you have tons of supply and you bought it at $3 and you bought, you know, let's say you bought 1,000 shares for $3,000, you know, for $3,000, 1,000 shares, and now it's, you know, $20 a share, you just made $20,000. You see what I'm saying? Just like that, just from that squeeze up to 20. So $20,000, hey, that's a quick steal. You would take it in a heartbeat as a whale. So as soon as you go and take that, you have a huge amount of the supply. I'm using 1,000 shares as an example. Usually whales buy way more, okay? Way more before the public, okay? So when folks are buying way before the public, all right, these are folks that are hedge funds, market makers, smart investors that see what the hedge funds are doing. Why is the smart money buying way before? They're watching the smart money behind the scenes and seeing where they buy. And usually they see where the smart money's buying by the dark pools, okay? The dark pools usually show big orders on companies, and basically the smart money knows something the most retail public does not know. So when you start seeing big orders on companies within the dark pools, and a good way to see the dark pools is through Charles Schwab's Street Smart Edge platform, their block trade indicator. You can actually see in the block trade if it's 1 million shares or more. If you see 1 million share order on a company, that's a red flag to tell you, hey, there's a hedge fund that is going to go and buy this stock. Why are they buying this stock? And if you look at the news, it may not even show why, why would that hedge fund buy the stock? And the thing is with dark pools, there's a print. So you don't know if it's a short print or a long print. But all you know is that there's a huge position sitting there with 1 million shares, okay? So knowing that, they just captured a lot of the supply, okay? Either short or long. So that tells you something is going to happen. So they're well sitting in there. You know, and during AMC's run up, we saw a call sweep, which is another thing, but it's kind of like a big order, just like a dark pool order. But a call sweep is where you have a bunch of call options that are sitting at a position. Okay, we caught a call sweep right here when it was like $5, okay, back in February. All right. We also caught a call sweep right here when we finally broke out above that triangle we had here, when it was just like this, where we had that triangle going on. Actually, it was down here. We had the triangle going on. We finally, broke out and started heading higher. Okay. I got to erase all this because we don't need all this. All right, just to clear your head. So that was one of the most important things. It was those call sweeps, because that's an indicator. Hey, why is a hedge fund buying all these call orders on the way up? That doesn't make any sense. What are they? Is it because they think something big is going to happen? And usually 9 times out of 10, that's what it is. It's the whales. They know what's going on, and they buy the supply before you can even touch that button. And then they promote. Sometimes they promote. This is not financial advice. This is just my theory, okay? But you get my drift. But you got to understand, we had trouble here near the resistance level, but then we finally debated and we broke out. Normally, what happens here, you usually get volume candles that are bigger. Like it'll be volume candles that fucking, sorry to curse, but they'll go up here, they'll come back down. You know, they'll be low volume. Let's just say this was the volume. I suck at this drawing, but let's just say there's a whole bunch of volume candles here. It's hard for me to draw squares on here, but you get my drift. There'll be huge volume here. Then it'll die down, you know, die down, and then another huge volume, okay? Then die down, huge volume again, all right? And it'll usually match the chart. Now, the huge volume is usually associated with breakouts because it takes volume to break a key support level or key resistance level, okay? We call it resistance, the red line, because it's being suppressed. But as soon as we break this level, this now becomes support, okay? So I'm going to turn this to green. As soon as we break it here, that becomes support, okay? And if we break this again here, well, we had trouble here, but we broke it, right? We broke that level, right? Easily here, over here. And then we went higher to over here, okay? Now, then we got stuffed back. So that was like 75. It was like 75 or 70, yeah, 73 or 75, somewhere around there on AMC, okay? After we hit that level, we came back down, all right? Now, when we pulled back here, we started to test right here, okay, that support level. We didn't get all the way down, all right? We didn't fall back to where we normally was. And what happens is every bullish trade usually has a higher low, okay, all the time. That means it's bullish. When you have a higher low, that means you're on an uptrend, okay? If you have a higher high, that also means you're on an uptrend. The reason being is because a higher high is telling you that the sellers are getting weaker, okay? And also, if you have a higher low, that's also telling you the buyers, see, you have a higher low here, a higher low here, right? You have a higher low right here. That's telling you the buyers are getting stronger, okay? They're getting stronger. There's new baselines. There's new demand spots, okay? Same thing with the sellers. You know, we're starting to see higher highs here. It was higher than that one, okay? This was higher than this one, okay? Now, we didn't get this here, but it doesn't mean anything. Right now, it's just temporary bearish trade. But a higher high is always going to tell you that the sellers are getting weaker in the negotiation, okay? That's one of the key things psychologically. That you got to understand. Now, what else? I need to erase this volume. Okay, we erased that part here. So this becomes support. This becomes support, okay? When we break this level and head over 675, that's going to become a key level at 75, okay? And that's going to become a new mental level, all right? So when you're dip buying, you want to aim as close as you can